Yeah, last class we have been discussed about an introduction towards the course, and this video is particularly for those who are attending or those who are analyzing a stock for a first time, or they have never heard about a stock or shares. Okay, what exactly it is, what exactly the share is, what it is. Everyone will be having a curious, those who are hearing this particular word first time, they will have a curiosity about shares. Many of them may be heard that, like for example, if I type Reliance money control, will go to money control, where we will get all shares detail, the platform where we will get all shares detail. Just you can type in your Google money control and go to first website, that is a moneycontrol.com. Okay, in money control you can search for any of the company which are listed in a public. Okay, what they are companies, in the sense, for example, I will search here, that is a stock Reliance Industries. Okay, one of the popular Indian company, Reliance Industries. When I search this company, here something is showing that, okay, the price of the particular stock, the price of the stock on today end is a 2161 rupees 0.25 paisa. Okay, this is the stock price it is showing, right? Okay, how they are arrived to this price, how these prices are changing, what exactly this share is. Okay, what Reliance Industry Limited, why they have been priced like that, what exactly, if I pay 2161 rupees 25 paisa today, what I will get. These are the questions will arise when you first time check about any stock market. Okay, we'll try to explain that, okay, what exactly this share market is, or what exactly this share, meaning of the shares, what exactly it is. I will take you to a small example. Okay, for example, you are planning to start a business, you are planning to start a business and you require 20 crores rupees to start a business, 20 crores rupees to start a business, and you know that I can arrange about 10 crores from family or friends, all this together, the partners all together, we can arrange a 10 crores rupees. Another 10 crores rupees, another 10 crores rupees will be taken from the bank, will be taken from the bank. Okay, so loan, as a loan, this is called as a debt, and this 10 crore what you have been invested is called as a equity, or in simple word, owner capital. Okay, owner capital. Okay, now you have been invested 20 crores rupees and started a business. After a 10 year, now it is a private limited company, now it is a private limited company. After a 10 year, you think that I would like to make it as a public limited company, or anyone can come and participate in my business. Okay, I would like to sell my part of my business to the others. That is what you thought. Okay, now to go to the public limited company, to be a public limited company, I need to sell my shares. In the sense, my ownership has to be shared with the public. How can we share my ownership with the public? That is a question now. What will happen? For example, we know that 10 crores rupees is a owner capital, that is what we have been invested. Now I need much more money to expand my business, so that I am asking public to invest in my company. But how much they has to invest and how they will be get the benefit out of that, that will be a question now. For that, what we do, okay, as a company, what we thought, I will divide entire ownership into a 1 crore parts. For example, I have an entire ownership has been broken into a 10 crore parts. Each part, how much it will be cost? Each part will cost what we have to do? We have to take 10 crore, that is the original capital, divided by 1 crore. That is nothing but each part will be having a worth rupees 10 per share. Okay, these parts are called, these 1 crore parts are called as a shares. Okay, 1 crore shares, and each share worth rupees 10. This is for a accounting purpose. This particular value is called as a face value. If you scroll down, okay, in that page itself, in a money control page itself for Reliance Industries, you can check that one. Okay, in a valuation here, you can check here face value of rupees 10. Okay, face value of rupees 10. That is nothing but the value of the each share. That is the actual value of the each share. Okay, but as a business owner, I would like to make money, in the sense I would like to sell it for a higher price, not it for a 10 rupees. For that, what we do, we will valuate our company. We will do a valuation. Okay, we will do a valuation, and valuation comes around 100 crores rupees. In the sense, the business what we are running from the past 10 years, it worth around 100 crore rupees now. Okay, 100 crores rupees now. And if I divide this 100 crore, if I divide, in the sense 100 divided by, what we have to do, 100 divided by 1 crore. Okay, that is a 1 crore shares. If I like to divide that 100 crores among the 1 crore investors, then how much it will be? Become a 100 rupees per share. 100 rupees per share. This is nothing but, this 100 rupees per share is nothing but a market price. Okay, market price. You may be heard that there is a IPO, there is a release of this particular company IPO. In the sense what they will do, after running for several years as a private limited company or a limited liability company, they would like to go to a public limited company or a limited company. Okay, they would like to be a limited company. So what they will do, they will evaluate their business. It may come 1000 crore, 2000 crore, 5000 crore, like that. They will evaluate their business on that particular date, and they divide that in terms of the number of the parts. That is nothing but, here we have been divided into a 1 crore parts, because 10 crore was our initial investment. So 10 rupees each. Okay, initially we considered as a 10 rupees per share. That is the face value. That is the original value of the company. That is what they have been thought. And 1 crore shares has been divided. Entire ownership has been divided into a 1 crore part. And with that 1 crore part, they would like to divide, in the sense each part they would like to sell it for 100 rupees, because their value will be 100 crore. That entire company value is 100 crore. 100 crore divided by 1 crore will become 100 rupees per share. In the sense, each part worth 100 rupees. Okay. In IPO is nothing but initial public offer. IPO. Okay. In IPO, they will say that we are ready to sell 1 crore shares. We are ready to share 1 crore shares at the rate of rupees 100. At the rate of rupees 100. What it says that? Okay, I would like to sell my ownership. Okay, and each part of the ownership will become will cost 100 rupees. In the sense, if you pay 100 rupees for me, I will sell one part of my ownership. Okay, one part of my ownership. For example, I have been invested around 1 lakh shares. I have been brought 1 lakh shares, 1 lakh, okay, 1 lakh shares from this particular company, and total how many shares are there? 1 crore. Total 1 crore shares are there. In the sense when I divide 1 lakh divided by 1 crore, 1 lakh divided by 1 crore, okay, if I convert that into a percentage by multiplying 100, if I convert it into percentage, that become a 1% ownership in that particular company. In the sense, if I buy a 1 lakh shares which worth 100 rupees each share, if I brought that one, it will become a 1% shareholding. In the sense, company ownership I have in that particular company. This is what the share is. A share is nothing but a company ownership. You are participating into a company by buying their ownership, by paying a money. Okay, now it become 100 rupees. How it become 1,000 rupees? In the sense, it gone up to 2,161 rupees. How it became? Okay, what will happen in a market when they have been announced the IPO? Someone may be subscribed, in the sense they have been brought the IPO. Once they have been brought the IPO, many enthusiastic investors will be there. For example, I haven't got any IPO, but I think I would like to buy a Reliance Industries. Okay, I would like to participate in a Reliance Industries. What I will do, I will ask the person who is already having a share. I will ask him, I will pay you 103 rupees, can you give it to me? Another person came and he said, I will pay 105 rupees, give to me. Another person says, I will pay 110 rupees, give to me. Okay, like this the demand creates. Okay, it's continuously demand creates. In the sense, someone may say 200 rupees I will pay, give it to me. Okay, it is like a betting, in the sense bidding for a shares. Okay, when you are getting a maximum profit, you will try to sell it off. Okay, one person will say that, okay, this profit is enough for me, I will sell it off. Okay, again that one person who brought, again tomorrow one more person come. Okay, I think this company I need to have. So again he will start participating in a company, and this share price goes up and up. Okay, sometimes share price comes down. How it happen? The share price comes down. Why it happens? The share price will comes down because there will no buyers, only sellers will be there. They think that this company is not doing well. Okay, I don't want to keep it in my portfolio, so I would like to sell it off. How you will think that FD is not worth, so I would like to close the FD. Same way here also shares will be sold. One person will say, I would like to sell it for 100 rupees. Another person comes, I will sell it for 99 rupees. One more person comes and he says that I will sell it for 80 rupees itself. Okay, then this market, you just imagine that you are entering into a market to buy a vegetable, for the same ingredients like a tomato or anything you are trying to buy, and there will be a shop to shop, there will be announcing that I will sell it for 80 rupees, I will sell it for 20 rupees, I will sell it for 22 rupees, like that. In the sense, the price is keep on going down to attract buyers, so that price will comes down. When they think that company is not doing well, the price of the share goes up. When they think that company is doing well and I would like to have that in my portfolio. Okay, this buying and selling happen because of the demand and supply of the, based on the demand and supply of the share in a market. Okay, this is about a share. It's clear. Otherwise, you can revise once again, rewind the video once again, and you can understand that what exactly share is. Okay, now it comes, someone may be having a doubt that, okay, somewhere here it is written 2161.25, the same Reliance Industry, and here on the right hand side it is showing that 2161.35. Why the 10 paisa extra in another side? Why the 10% less in a left hand side? What is the reason here? Okay, there will be a this doubt will be there in each investor. Okay, this is because of the price change in a price because of the exchanges. What is mean by exchange? Okay, stock exchange. Stock exchanges are nothing but where you are buying and selling your shares, where you are buying and selling your shares through a broker. Okay, through a broker may be any of the bank or any of the private broking firms will be there. They will be help you to buy or sell the shares, and that buying and selling will be happen in a exchange, stock exchange. That is nothing but popular two stock exchanges are there in India. One is a Bombay Stock Exchange, that is a BSE, and National Stock Exchange, NSE. You can type in your browser BSE, Bombay Stock Exchange. This is the oldest stock exchange in India, oldest stock exchange, 1875, before independence. Okay, near 150 years now, 145 years old stock exchange. Okay, this is the one platform. This is the one platform, BSE, Bombay Stock Exchange. One more platform is there. Okay, NSE, that is a National Stock Exchange. National Stock Exchange. Okay, they are came in a 1992 post LPG liberalization, privatization and globalization. After that, they are came with a online platform. Now both are online. This was a offline previously, then they become a online, and the National Stock Exchange become a first online stock exchange in India. This is about a stock exchange. Stock exchanges are nothing but just to trade, in the sense to buy and sell. That is like a marketplace, like a shops. Okay, where you are buying and selling or the goods. Same way, stocks are bought and sold on a stock exchange. Either you can choose a NSE or a BSE. You can select alternate also. You can buy in NSE, you can sell it in a BSE, or you can buy it in a BSE and sell it in a National Stock Exchange. Both are possible. Other international stock exchanges are there, like New York Stock Exchange, Shanghai, London, okay, Japan Stock Exchange, Nasdaq. All these are the international stock exchanges are also there. They are also function in a same way. This is about a stock exchange. The one more thing we need to know about here. Okay, why there is a price difference between the two stock exchange. In BSE, it is a 10 paisa lesser than the NSE. Simple, it is the buying and demand and supply is a difference in a two stock exchange, but ultimately there will be a 10 to 20 paisa difference will be there. That is called as the arbitrage. Okay, otherwise there is no huge difference will be there. It is like, for example, you are buying a Bisleri water bottle in two different bakery. One bakery may charge 1 rupees less and one bakery may charge 1 rupees higher. So they are selling in a two different platform. Okay, and the buyer's demand in the NSE, he is saying that I would like to pay a 10 paisa extra. For that reason, the price become a 10 paisa higher than the BSE. Almost the aim of the exchanges will be to keep the similar price in both the exchanges, but there will be due to a small technical factors will be there. For that reason, 10 to 20 paisa difference will be there. Okay, that is one thing we have to observe. That difference is called as a arbitrage. For example, you are buying in a BSE, immediately if you are selling in a NSE, you will get a 10 paisa. Immediate profit you will get. That's called as a arbitrage. That's called as a arbitrage. Okay, apart from that, we have to know about one more thing, that is a trading mechanism. Trading mechanism. When will we start our Indian market? Right? 9:15. Okay, morning 9:15 to 3:30 afternoon it will work. Okay, 9:15 to 3:30, that is the market open and close time. And Monday to Friday will be there. Monday to Friday will be the operation time, okay, operating days. Apart from on national holidays also it will be closed. Saturday, Sunday and all national holidays, market will remain closed. You will not be able to transact on that particular days, Saturday and Sunday and all market holidays. And if you buy today, it will come to your account, in the sense the shares will be reflecting in your demat account within 2 days, T plus 2 days. Today you have been traded, within 2 days it will be reflect in your account. That is a one thing. And if you are selling, also same thing. If you are sold something, you sold these shares, your amount will be credited to your bank account within a 2 days. This is called as a T plus 2 day settlement. Okay, this is called as a T plus 2 days settlement. Okay, T plus 2 days settlement. Then we have to know about market indices. Okay, market indices. There are 2 market indices we have. Okay, 2 market indices. One is a Nifty. Okay, the market indices, 2 market indices we have. One is a Nifty, that is run by a NSE. The second one is a Sensex, that is run by a BSE. Okay, Sensex is run by a BSE. Nifty 50, the top 50 stocks are considered to benchmark, that is a Nifty 50, that is run by a NSE. And Sensex, top 30 companies will be considered to calculate this index value, that is run by a BSE. And these 2 are the indicator for the whether the market is going up or down. Just for the entire market they will consider, but it is not true that your stock also moving up or down. It will be very different factor. Okay, that is about a market indices. And you may be having a question like, okay, market indices is there, everything is fine. Okay, who is regulating the market? How can I ensure that what I am buying I will get, what I am selling I will get? Who is ensuring that? There is a regulatory body is there, that is called as a SEBI. SEBI, SEBI, Security and Exchange Board of India. Security and Exchange Board of India. It is also established in 1992 after Harshad Mehta case as well as the Ketan Parikh case. Once the Harshad Mehta and Ketan Parikh cases are exposed, okay, everyone lost confidence in a share market. There was a gambling happening in a share market. Okay, someone participating without anyone knowledge, and something money laundering, everything was happening in a share market before that. To avoid that one authority, in the sense controlling market regulator came, that is nothing but a SEBI, that is a Security and Exchange Board of India, to list any of the company, to take out any of the company from the exchange, or to announce the dividend, everything they has to inform first SEBI, then they has to take a action. Nowadays it will not be possible to company to do as their requirement. They will be having some mandates to follow, be on a market. This is about a pure introduction side of the shares. Okay, first we have been understood that what exactly is the share is. That is nothing but a company ownership. You are participating in you are asking for the ownership in a company by paying some price, what it is expected in your market. What is expected in a market, based on that price you are ready to pay that price to participate into that particular company, Then second thing is we have been where it will be traded, that is the Bombay Stock Exchange or National Stock Exchange. There it is the intermediate media. Then trading mechanism, like from when to when it will be operated, Monday to Friday, and 9:15 to 3:30 p.m. and whatever the transaction happen, it will take 2 days. Within 2 days, cash or your shares will be deposited to your account. And who will be regulating? That is the regulated by the SEBI, that is nothing but Security and Exchange Board of India. Whatever the actions to be taken by any of the company has to inform to the SEBI first. And if anything happen, any fraud happen in a market, SEBI will recognize and they will punish, and they will give the grievance to the investor. You can complain to the SEBI if your financial fraud happened in your account or something, credit or debit side. If any problem happened in terms of the share market, then you can contact to the SEBI to get a grievance from them. Okay, this is about a basic introduction for the security market. Okay, those who are new to the share market, just understand about what is the share, where it will be traded, why it is NSE and BSE is there, what SEBI does, and when to when it will be traded. These things you have to know. Okay, apart from that, all other things will be discussed, like what are the factors involved in the selection of the stock, how, whether I can select a Reliance or not. All these things will be discussed in the analysis part. This is just to give a brief introduction to your syllabus, in the sense just for introduction to your shares. Okay.